at Zillow, they have like a Zestimate. You can look at the Zillow's estimated value of a residential property, even some commercial properties, and then people accept it as like right. There is nothing like that in ag land, because the county ag land transactions in a given year, it's probably less than 20, maybe even down below 10. And it can have 5% or 10% fluctuation year over year. So automated valuation models like Zestimate are going to work in it.
Welcome to the Purdue Commercial AgCast. I'm Chad Fiechter. This week, we're continuing our Lessons from the Delta series, conversations that Todd and I had recorded last summer while traveling through the Mississippi Delta in Arkansas. If you didn't catch episode 1, we laid the groundwork for what makes this region different, from the scale of rice production to the role of irrigation and water management in shaping the entire production system. In this episode, we dig deeper into one of those conversations. This time, it's with Aaron Shew, Chief Technology Officer of Acres. We discuss the economics more, land values, crop optionality, capital intensity, and how risk is managed in a region where irrigation is a must. You'll hear a lot of this recorded in real time, in the truck, in the field, as we try to understand how production systems evolve when the constraints are different than what most Midwestern corn and soybean farmers are used to. Our goal here isn't to compare regions, it's to ask better questions and to think more clearly about how capital, water, and management decisions shape profitability. This is episode 2, our conversation with Aaron Shew. Aaron, can you introduce yourself and tell us a little bit about yourself?
Absolutely. I live in Fayetteville, Arkansas. I've been in Arkansas for the last 13 years. So basically an adopted Arkansan. I currently am the head of product and data at a company called Acres. You can check it out at acres.com. We're a software business focused on the land industry. It's exclusively pre-built environment real estate. Focus pretty heavily on the ag industry. Ag recreation land, ranch land is bread and butter. So we have both a web app and a mobile app that serves clients in that space.
Acres is related to the investigative work that Acre Trader was doing in systematically being able to evaluate purchase decisions based on available data, but a lot of the data that you have and work with is already publicly available or big data sets. They didn't play nicely together. Plus then some additional value added things that are not publicly available that you've acquired since then.
Yeah, Acre Trader has been around since 2018, roughly. So I was a professor of agricultural economics at University of Arkansas at the time. So this would have been about 4 years ago when a good friend of mine, Ben Maddox at Acre Trader, now Chief Strategy Officer at Acres, introduced me to the company and said, hey, we're contemplating building out some mapping software to help support due diligence of farmland. So I came on in a part-time consulting role and started building the data team for Acres. So at that point in time, it was barely more than a spreadsheet. Basically just a spreadsheet of all the data sets they wanted and how they wanted to use them for diligence on farmland. So now we're fast forward 3.5 years. I was there about 6 months part-time and just fell in love with the business and the concept, both sides of the business, the Acre Trader business and the Acres business. We built out this app that was really initially meant for internal due diligence, but quickly we realized like we've consolidated 4 or 5 other softwares being used for different things. So let's see if we can go to market with this. So we actually broke out a separate business. So we are 2 independent businesses now under the same umbrella, Acre Trader and Acres.
What struck us pretty quickly in this conversation wasn't just the software side of what Aaron's building. It was what his work reveals about land markets in agriculture. In the Delta especially, land values, lending relationships, and transaction data play a much bigger role in how capital moves than I originally had thought. So we asked Aaron to walk us through how agricultural land actually gets valued and why it's so complex.
And who are the clients or users of Acres?
So the enterprise side of things which is the highest value part of the business, is going to be, I'd broadly say it's anybody that is buying, selling, investing in, or lending in ag. So that covers a broad swath of people. Lots and lots of ag brokers, your large agricultural lenders, which includes both conventional banks as well as the farm credit system, and then a number of similar firms to AcreTrader. So other investment capital firms that are managing farmland assets are our clients. So that's at the enterprise level. We then have some lower tiers. So we're primarily a B2B software, but we do have a mobile app and a consumer web application called Plus. And so that's folks maybe broadly in the ag space, but they're not making money buying and selling or investing in land, but they want ownership data and they want to see soils and vegetation index, elevation, a bunch of other data on a specific property. You can get access to a lot of that data on our Plus version of the software, which is like $8 a month. So there's a couple core objectives our user can have. So the very first focus of ours was, how do we value land better? All right, so if you go look at Zillow, they have like a Zestimate. You can go look at the Zillow's estimated value of a residential property, even some commercial properties, and people accept it as right. There is nothing like that in ag land. And there likely won't be for a very, very long time, if ever, because the data is so hard to come by. If you think about the number of ag land transactions at a county level in a given year, it's just not that many. It's probably less than 20 in most counties, maybe even down below 10. And the market for ag land, of course, moves quickly. So it might, I say quickly, it doesn't move that quickly relative to the stock market, but like year over year quickly. You can have 5% fluctuation or a 10% fluctuation year over year in ag land, particularly the last 3 to 5 years post-COVID. And the high interest rate environment has changed things. So automated valuation models like Zestimate are going to work in ag land. So our users are coming to our platform to get the best agricultural land sales data you can get nationally. So they're going to come in our tool and they're going to go find a target property. So they might come here in the Delta in Arkansas. They'd find that property, got all the owner data from the county assessor's office, and you can go check out our sold land, and you're going to get a mix of sales data there. So you're going to get courthouse sales. You can find curated sales that our team manually finds. We monitor hundreds and hundreds of websites every day and every week to put in not just, hey, sale price and buyer seller, but the actual sales collateral. So think farm pictures and the listings information that you would have for that farm gets attached to our curated sales data. Then users put in their own data in a contributory database, which means, and we don't charge for that, it's just, hey, if you want to share, you're able to collect 10 sales a year in your own business. If you put those in the system and make them contributory, you can see everybody else that contributes. And so those are now in the tens of thousands of like highly curated data by professionals that value land. So that would be the number one thing these clients came in to do is, okay, I've got a property, I need to value it. So I'm gonna go grab my comparable sales, get a quick estimate, price per acre this should list for. They may generate reports or embedded maps they can share publicly to market a property if it's a broker. PDFs for due diligence, sharing within a team. So that was the number one reason. And then what we've seen evolve is that folks are using it a lot more for lead generation now. So it's not so much, hey, I'm going to go value this property. There's plenty of that still. It's still the core function. The other thing is we also have mortgage data in the tool. So they can go search and filter farm mortgages, find the ones that are maturing, and reach out to those farmers. And so they can build a whole lead generation pipeline within Acres and manage that as a team across analysts or loan officers. So that's another core function would be lead generation and land management.
So our time together traveling the Delta, you seem to just bring up a random interesting thing that you did prior to what you're doing now. Can you tell us briefly your backstory, your path to where you are?
I've had a rather varied career path, you could say. We can go way back to, graduated high school in Middle Tennessee and tried the college path for a semester, but it turned out I liked bull riding and drinking beer more than I liked at school. So I dropped out of school and through a somewhat winding path ended up in Thailand. So I grew up working on hay farms in Middle Tennessee and sort of the ag background. Anyway, I don't know, I always wanted to kind of be on the edge of things, and so I had this opportunity to go to Thailand for a year. Worked with this demonstration farm. Ended up back in school, studied abroad numerous times. I mean, spent a year in India, spent another 6-8 months in the Middle East, a couple of different places, Morocco in particular. And then post-graduation with undergrad, I got married and my wife and I moved to first Afghanistan to open a soybean mill. And then after that got launched and off the ground, we moved to Iraq, naturally, to start another soybean mill. Starting a new business in Iraq in particular was just a massive learning experience. We worked with about 10 farmers to grow a few hundred acres of soybeans. Some things worked, some things didn't. Business fell apart. And that's when I decided that I should move to Arkansas and go to grad school. So then ended up here, went to grad school. So focused on GIS, geographical information systems, and remote sensing. And traveling the world is always interesting. Cartography, building maps. I took a short-term postdoc with USDA Ag Research Service, and then a pretty unique position came up at Arkansas State University in Jonesboro. It's just one big college bag, and you're working with soil scientists and plant scientists, but they had an chair focused on agribusiness and innovation in the Delta. And I'm not even remotely qualified for an endowed chair, but studied rice production and spent a lot of time doing research and some extension-oriented work in the Delta. So I was like, I'm gonna throw my name in the hat, and I got pretty lucky. So took that position and was there for about 3 years, but U of A kind of pulled me back to Fayetteville after 3 years in Jonesboro. I got an offer to come back to the U of A to be the associate director of the Center for Advanced Spatial Technologies, so yes, remote sensing, and an ag econ faculty member. So that brings you right up to where I was at before I jumped over to Acres.
Okay, so all that background comes with a lot of technical skills and experience. When I think of software companies and what happens on a day-to-day basis in a software company, I have absolutely no idea.
My job is getting on the phone with clients or potential clients. What works? What doesn't work? What are your biggest pain points? What data sets do we not have that we should have? And then how do you want to interact with it? So trying to answer those questions to define, hey, what should we build into this software and what should we not? There's a lot of art rather than science to figuring out which features are most important to invest in as a whole engineering team.
I would assume also some of the people you're working with interested in technology, and then they've found themselves working in the ag space and learning about agriculture. What's your breakdown that you've observed at your firm or other firms you've interacted with in terms of how many of them are getting people interested in our problems versus we're trying to learn about these techniques from our problems first?
We spend most of our time, again, just talking to those clients and condensing their problems into solutions that we can deliver through Acres. So very little internal knowledge is required at this point because we're spending a very sequenced and intense amount of time with our clients.
And that land discussion matters because in the Delta, production systems are deeply tied to land characteristics, soils, water access, levee systems, and those factors directly influence what crops get planted and how they get paid for. Specifically, what we were interested in was how rice farmers got paid. It's very different from corn and soybeans. And it's important to understand that rice isn't sold the same way as we in the Midwest sell grain. You're not just paid on bushels harvested. There's another layer to it.
So you harvest the rice. Do you have to then dry it?
It comes out dry. I mean,
Okay.
it's similar to other grains in terms of, you wait till your harvest moisture gets to a certain point, you harvest it. It's probably the most similar thing is probably wheat, similar grass variety, grass crop. What is very interesting, though, about rice that's very different from corn and soybeans is that you're not paid on raw yields. You harvest your rice, and then you generally, the typical thing folks do in Arkansas is take it to a large rice cooperative like Producers Rice Mill or Rice Windstream. There's a number of co-ops out there. It goes through the mill, and you get head rice yield, milling rice yield.
Head rice?
Head rice
Head
yield,
rice yield.
HRY. So farmers get paid based on the percentage. Without getting too crazy with the math, you can expect if 55% head rice yield, that's full kernel, unbroken rice. Milling rice yields would be that 55% plus another, say, 10% of broken rice, which comes at a discounted rate.
Okay.
And so you're paid a certain price for your brokens and a certain price for your head rice yield, your full kernels, and however that shakes out, multiplied by the raw counterweights that you've harvested, is what you're going to actually earn.
The more we listened, the clearer it became that Delta agriculture isn't just a different crop mix, it's a different capital structure. Land values, irrigation investment, milling risk, they all stack together in ways that change how risk is managed. That's part 2 of our Lessons from the Delta series. Next week, we're going to continue the conversation with Colson Tester, digging further into how irrigation is managed on the ground, what automation looks like in practice, and how some of these capital decisions compare to what Midwestern grain farmers are facing today. If you're finding value in this series, make sure to subscribe to the Purdue Commercial AgCast so you don't miss what we're doing next. We'll continue this Delta series over the next several weeks, alongside our regular Ag Economy Barometer insights and implication episodes. And if you want to see some of what we're talking about, the fields, the levees, the water management, we're sharing short video clips from our Arkansas trip over on our YouTube channel. Those visuals may help really bring these conversations to life. If this episode sparked a thought for you, consider sharing it with a friend or another producer who might benefit from this discussion. Thanks for listening, and we'll see you next time.